Hey guys, it's Will here. I'm going to go through the markets and some other things. Might be a mishmash of things just to show some of the things I've been doing since the last video. If you watch some of my past videos, you know I've been talking about generally a downtrend in the market, like a shaky kind of period. And there was a bit of a bounce recently, but we might be having sort of a continuation of a downtrend. This is a difficult time for swing trading or that type of shorter term trading. Because there's a lot of ups and downs based on emotion and news-driven events with the Fed and war and stuff like that. But as much as we can just look at the charts for trends, on a weekly or somewhat longer duration. So what I usually do is go through each of the markets and I usually point out some other things that I've done in this program, TC2000. So if you want to get the free trial or $25 off subscription, you can check out the link in the description below. I've got the gold plan, and I also added real-time US data so that there's no 15-minute delay in the charts. So what I've done on this particular tab, so down at the bottom of TC2000, there's a bunch of tabs here. And there's different views. I've talked about these before, but if you want to make a copy of like if you have a screen here like this, you can just right click on it, duplicate, and then you can make changes. So you might have different views. I've got some charts here, tabs that have like no, I'll show you right now actually. There's no like moving averages and stuff like that. It's just a very simple price chart, which can help you see things sometimes a bit clearer. I've got a regular candlestick chart. What I'm gonna do though, I'm on this tab I've called Heiken Ashi. So these are Heiken Ashi candles. So what they do is they average the previous candle. So it kind of smooths out some of the ups and downs. There's formulas for all the open and closes and things like that. But one thing you'll notice is that the open of the candle is at the midpoint of the previous candle. And so you can see here that you had a bit of a run here. This is a daily chart, and so when I was doing my videos, I was talking about we broke down through the 50, then the 200. It kind of failed at the 200. Then we had this big run up, and of course it failed at the 200. So a lot of times when you're buying and trading, like if you decided to buy in when it turned green and went up here, you would sort of have a target of the 50 or the 200 as well. So it doesn't always just go straight through the 200. I mean the 50. So here it went right through the 50. But sometimes like it came back up here and bounced down. So you could sell 50% at the 50 and see what happens, or just watch it. But so there was a really good run here, and then it kind of got stuck at the 200. And so, but once you see this, and you see it turn around here, it sort of, the momentum started to come back down. And today we have this down 2% right now. It may recover, it's hard to say what's going to happen. But, obviously, also, the other thing I want to mention is that when you're looking at the indices, you don't necessarily have to buy the index. It's just a sort of a guideline that, markets are doing well at that particular time, and then you can buy stocks or ETFs, sector ETFs or whatever. But these dots are volatility stops. So when they're green, it's generally an uptrend. And when they're red, it's, a downtrend, a start of a downtrend potentially. And you can get ups and downs. Like here, it's quite, ups and downs. So, but you can have other rules as well. Like you could say, if this starts to come up, like right at the 200, I'm not going to really buy this. You see how it bounced twice out the 200? So, buying it right here with the 200 right there isn't much of a reward for the risk. So you might decide not to do that, or you might decide to not do anything when it's below the 50 and the 200. So you wouldn't get into any of this right here. But when you see things coming up like this, it's very tempting to get in. But if you're patient and you want to see it, maybe you want to see the 50 get up over the 200, or you want to see at least the NASDAQ break up over the 200 before you got in, stuff like that. And so let's look at the other markets. IWM, So this one has been generally in worse shape than it was in a really flat period. Then it broke down below the 50. The 50 crossed the 200, and you just broke up over the 50 right now. And you're probably thinking, if you buy it right here, you'll just have a trip to the 200. But there's been a reversal today, as of it's 2:30. So you've got a hour and a half still. Things are going up a little bit. If we go to the 10-minute quickly, oh, there's one green bar. I'll go back to the NASDAQ. So yeah, there's just a little bit of a turn up in the last 10 minutes. But and so let's go to the S&P 500. So that one actually got up over the 200. And of course the 50 hasn't crossed back up, but this one crossed right through the 50 and the 200, and then it's been pulled back. So now it's just kind of right at the 200, a little bit below. So, and the momentum is turned down again. So momentum can switch, pretty quickly on the daily chart. I'll talk about other time frames in a second here, but let's just go through. This is I'll do the Dow Jones because the US stuff. So here, we had kind of a little bit over the 200, but a pullback here. And the 50 is very close, so it might get sandwiched in there, or it could just, you don't know what's going to happen right now, but it's, this isn't a good look. The momentum turned down. And then finally the Canadian the TSX has done better because it's got oil and gas and resources in the indices. So in the index, so basically, this candle right now is a bad sign. The momentum crossed down just on a short-term basis. But you can see sometimes when you get a pullback on the candles down here, it never crossed on the momentum point of view. So that could keep you in if you're watching the momentum crossovers. Also, if you have these V stops here, the volatility stops, you can see how this red candle never got to this point, so you could hold for little pullbacks. One thing you can do as well is buy right after a pullback. So as soon as you see a pullback and maybe a green candle or an upper candle that's kind of heading upwards, like, if you want to be safe, wait for the green volatility stop and buy right after that. And then your stop would be below, the low of that candle. And therefore, you're not going to buy like up here, like if it starts to go up, you just have to say, I missed it and I'm not going to get in at this point and wait for the next opportunity. Oh yeah, so one thing I wanted to mention was if we go to monthly charts, you can see that we have red dots and we have a crossover, a couple of weeks ago or months ago. So that's a negative in terms of, same with the IWM, S&P 500, see the price percent oscillator, they've all crossed here. So the monthly momentum is down. So there might be little swings from week to week or day to day, but the momentum is down at this point in time. You can't just look at the price percent oscillator or MACD. It's not 100%, going to determine all the successes and fails, but that is a good sign. If you have an uptrending monthly chart like here back in October, as long as you had that nice monthly swing, that was a good opportunity. Because if we look at weekly chart for, like, let's say NASDAQ, we came back for the last couple of weeks, which would be a tempting buying opportunity, but you've got that 50 right there. And also the momentum is below zero. So another point for MACD or price per oscillator is to wait till it gets above zero. You can see here how once it's above zero, it did pretty well. So that could be another criteria, is waiting for it to get above zero, or at least crossed over here. And the chart would be, above the 50-day. But if you do buy here, like when you see these green candles, you probably want to use either the volatility stop, or more specific to price action is the low of the price of the candles. Another thing I like about TC2000 is there's sectors and indices. So that's, you see here it says sector indices, industry. Sectors are the main sectors of the markets, and it's an easy way to sort of look at the overall. So this says utilities here. You can see that's number one today. This is today. and real estate, and of course communications because of Twitter and stuff, consumer defensive, and you're probably going to see healthcare. So when you see those ones, those are typically done during downturns, safety plays. And so the first thing you should do probably every day is, or week, whatever your time frame is to look at the overall indices. I also have added columns here for 90-day, 30-day, and 5-day performance, so I can see not just today, but like what's kind of which ones are kind of doing the best. So that way I can see 90 days, obviously energy. And the way I do that is when you right click on this, you can insert columns, or you can replace the whole column. So once you create a bunch of columns that you want, maybe on every chart that you open, you can say save the column set, and then it says here as default. So you save it for default, then every time you open up a new window, it'll give you this set of criteria. So this gives me a way to see like what's the quick 5-day trend, because I don't want to just look at one day. What's the best for, okay, utilities, and then we have communication. Let's go 30 days. Utilities again, energy, healthcare, real estate. So that gives you a general sense. And then the other one, so that's kind of the sector. And then the other thing is the industry indices. So that's like a subcategory of sectors. So then you can look at, obviously you can just look for today and see what the hot thing was, tobacco. And the nice thing with TC2000, there's so many things that I love. That's why I talk about it all the time. But if I click on this related items, I actually get a pop-up. So you're going to see tobacco companies in here. That's a really nice chart. Philip Morris. Not perfect right now, but there is a bit of a low here, and it's coming up from there. And the momentum is slightly curling up a bit. But you can drill down into the stocks within that industry index. Drug manufacturers, and then you can put your scans on those as well, like AbbVie, obviously, or not obviously, but for you that aren't looking at, aren't aware of this, but AbbVie's in a really nice uptrend there. Pfizer might be, had a bounce off the 50. I'll have to see that. I don't like this part where the momentum is, sloping downwards, but Lilly looks good, in terms of the candlesticks there. And so, but the other thing you can also do is look at sectors. Like if you're over time, you get to know what sectors. Like for example, if I just click on here and I go REIT and type in industrial, I could even put ETF in there. No, that doesn't work. Okay, yeah, it's not an ETF per se, but you'll get a REIT. You'll get a list of REITs here, if it happens to be, say, industrial in the name. So Plymouth, say for example, and that can help you find REITs. There's other ways to do this, but you can see the residential REIT started to poke up a bit. So what you could do also is scan this whole set of indices here. But if you get some ideas when you start, you hit the space bar, you start going through, obviously utilities, discount, and just because they're sorted by percent change doesn't mean they're going to be in a great shape. It's just that one day they're doing well. So that's why I use scans. Medical distribution is really good in a beautiful, that's a sector there, or an indices. From there you can look at that chart. I mean, that's just, this is a weekly chart, but incredible. Like you could just buy that and hold it all the way up through here, and you've never broken those volatility stops the whole time. So what I wanted to point out was, if you open up a watch list, say, I'll just do that again. Say we open up a sector watch list. You can click on this move window crosshair here, and then you say move, and then it shows you 3 spots, that the chart you're on, like the chart, or these two windows here. And I'm not going to do that because I've already done it. But on 2 of the tabs, I have sector and indices. So it's just quick for me to click on this, on these tabs. I don't have to go into the watch list, but it's not much, it's just two things that I have that I can quickly look and say, okay, what's happening here? And you could scan. So that's what I like about TC2000 is you can scan anything that you create. I've got a tab. So for the market in currency, I took out the, actually, I'm going to rename that. Let's see. If I go to my personal watch list and I right click on markets and currency, I'm going to get rid of the currency and I'm going to say markets. And then, so I've got a tab now with currency. So I moved it away because when I see gains or losses, I don't want to see like currency. I just want to see the market. So it kind of created a problem with the sorting. Because I'd see like a Canadian dollar exchange, or I'd see a dollar, the US dollar or whatever. And so I wanted to separate that so that when I go to markets, it's all basically the market. And so, I can see which one is worse and, which one's doing well or not. So anyway, I've got a tab here. And the way all you have to do, like say I'll click on this natural gas ETF. If I go to this plus sign here, I can say add to one of these watch lists, and then it puts it in the watch list for that. So these are like, at the top of here is a watch list. So I have a currency watch list, sectors. I have this inverse ETF watch list because when the market's like right now, when they're starting to go down, I want to have, because when you scan charts, like you might scan a US ETFs, you're going to get all the ETFs, and you might just want to know, what are the good ETFs? What are the good inverse ETFs? I've got one for leveraged ETFs as well. So you can see here on this chart that all the inverses are up. So like I'll start at the bottom with DOG. If we go to the daily chart, it's quite choppy, but you see right here, there's a green up candle. And of course you've got the 250 right there, but we'll see what happens, and it's crossing up here. But when it crosses, it's a mixed blessing. Sometimes when the PPO or MACD crosses, fairly below the zero line, you'll get a nice little run. Each time you see how it crossed, you got a run up here. This one crossed at a higher point and had a bit of a run. But when you're down at this point, you have a lower momentum as well. So it may not work. And of course, you're not probably going to, you may not decide to trade the dog because, this particular distance is a few percent, but let's keep going. So we have the S&P 500 short, and you can see you got a green candle, so there's a potential to get in. There's the RWM, that's the inverse of the Russell 2000. That's starting to look good. This is the TSX. It's a bit tricky when you're going against the market, but there's a lot of people that were buying the dips and stuff. But and then this one's a short of the NASDAQ. Okay, today's the first day. You have a green candle, so if you're anxious to get in, that's a way to jump in. But you want to wait sometimes till you've established. Like here, it breaks up and then it pulls back and then it starts to go up. So if you're a bit more patient, wait for that sort of confirmation of a uptrend. But the first break is where you're mostly going to get the most bang for your buck. You can see the price percent oscillator curling up here. Then we get into a little bit of sector ETF. So this is the marijuana. This is a Canadian ETF, but you can see that it's done quite well because cannabis has been getting killed. So, we'll see what happens with another run here. There's an inverse for the ARK ETFs, but they've had quite a run, but you never know. But it's starting to curl up again. So we'll see what happens if there's more room. But as it drops, it's less and less of a chance of being successful. But what else? See if I put if I have another tab. Okay, so something else, if you click on watch lists, I'll show you. There's a leverage. This is what I created myself. It's called leverage. So I took a lot of the ETFs from a company called Direction. And you have WebS, which is the short of the internet type stocks, 3x. So this one's riskier, obviously, with a 3x. This is high beta short as well. Been quite choppy, so this would be tricky. And the Tech S as well, 3x. Stocks. If you want to short the semiconductors, there's a short of the NASDAQ. That's a different company, ProShares. They're not all negatives. These are 3x of the utility sector. So utilities don't usually go up and down. People use these for different reasons, for leveraging, for hedging. But nothing to say you couldn't hold this during these, if you're a good candlestick trader. There's a whole bunch in here. So I added them, like real estate, healthcare, bulls and bears in here. There's a short of crude oil. Obviously, that's not going to be a good one. Or may be in the future, near future. But financial, there's gold inversion, there's energy, there's a biotech bull. There's a biotech bear, Lab D. So anyways, I don't want to go any much further than that, but what I like to do is kind of go through the markets and then also give you some tips or little hints about the TC2000. And one last thing, if we look at sectors, if you sort by change, percent change for today, obviously utilities is doing well. Healthcare, it's all the classics of a potential downturning market or safety play. If there is maybe a recession, whatever, it might be too early to tell, but there's staples. These are all classic. When the other markets go down, like these are the classic ones. The other thing is the inverse of the treasury. So the yield is going up. So that means that the bond TLT is going down. People are selling bonds. The Fed is supposed to be selling bonds or like getting out of that bond purchasing. So an inverse way to deal with that is to buy TBF. And that is a short of the 20-year. Real estate, I don't know about that one because, interest rates are going up and that does affect real estate. I don't really, the candles are quite small doji types, but so anyways, these are some of the ETFs, the sectors that are doing well today. So that's a bit, you can use that as a clue when you see like the market's going down and you take a look at what is strong, because that might mean that it gets stronger in when things recover. But it doesn't always mean that. It could be just the opposite of what's happening today. But if there's a trend in the charts, then obviously that's more important than just what happens on one day when the stock drops. But it can be a sign of relative strength. Like if something doesn't go down as much as other things on a day, that's hits pretty bad. That does show strength. But silver, I don't really like this chart. It is getting close to the 50. It's right near the 50 and the 200s right here. But this is a pullback, so you want to get in when you start to see the green candles on the heading back up again. So you can see how this momentum is heading down close to zero, so you'd want to see it turning around. So okay, so that's it for today. I hope that helps. I do like to show little parts of TC2000 that I use that make it a joy to use. So if you want to get a free trial or $25 off purchase, check out the link in the description below. Okay guys, good luck and we'll talk to you in the next video.